So in the final warning of XAUUSD, which we looked at critically of price returning into the demand zone. This is demand floor. So we looked at it again on a clean fresh chart as the market opens with a strong gap, a strong pull from 62 into 45. What happened? The principles of break and retest returned. Then we have here demand floor, and we have here supply roof. Don't be confused with intraday roof and higher time frame roof. They are not the same. But I like to use roof and floor to make it simple. So we see we have here supply roof. What does that mean? Allow price to create a structure. On a one or two dance, you are right to make a structural decision. We came here 3 times on a supply. Price have sold out. We came for a retest and had here as RT, a retest candle. You can see it is very clear. We returned again and we return again RT, and price have done exactly what we expect it to do. We came here and another retest before the break of structure on Tuesday. So price broke the structure on Tuesday and came down to complete this descending channel in a form of a rectangle. This is a descending channel. I would like to call it DTL, descending trend line. Two descending trend line. One acting as a supply roof, one acting as a demand floor. After we have a resistance structure here, so price will continue to follow structure. So we have found buying pulse on the floor. On the floor, we have series of demand. Series of demand. Look at demand here. Look at another demand. You want to picture all the demands. Look at another demand. Another demand, an ascending trend line. That was why I called it a demand floor. It's a floor where demand is key priority. You can also create a zone in order to accommodate price. The more stingy you are with your zone, the higher you will be pulled out from a trade that will bless you. So, price on return. This is a 3 hours resistance structure. This is 3 hours roof. If you turn on your line chart, you will see that we have never had a body of a candle break out from this structure since we had an all-time high 2008 683 into 84 into 82. The body of the candle have closed always below this line with a wick. This is a 3 hours chart. And when we look here, we see that close of Monday also drop price. And by Friday, price touched this roof and returned to break the structure. As a result of the support structure we have at this level, we have a strong support structure that held price firmly. So this is the structure that pulled price to break the resistance structure, setting up a buy opportunity. This is the structure started from here, support, a break of a support because the price wants to test the floor. The price wants to come to the demand zone. That was why it came to the demand zone. After touching the demand zone, price returned to respect the structure. It started respecting the support structure and broke the support structure. Price returned to the demand floor, picked up liquidity, and when we got to this structure, we actually broke this structure again to use it as support for uptick. And price technically opened on a 60 pip drop back to retest a descending channel, a breakout from a descending channel, and a retest in the zone of 2646. We have double confluence at that level. We have a resistance structure, a 3 hour resistance structure in the zone of, we like to change the color, 2645.09. And we also have a descending trend line, 3 hours close descending trend line where the body of the candle is monitored. Every high was closed below the trend line. We also have an ascending trend line, a long-term supply roof, turn demand floor. When a demand roof is broken, when a supply roof is broken, what do? It becomes a demand floor. So look at the supply roof. Respect, sell. Break of the roof becomes demand. So price returns to the area of demand. Look at the long-term ATL, ascending trend line. So, so we see ATL, another ATL. So it is based on structure. We have here supply, resistance becomes support. We call it ROS. Another ROS. We have another ROS here. A break of structure and a retest to return price to demand zone. So technically, Open of Sydney came back to retest the structure where we have double confluence, 2645. We were expecting price to return to 37 level for a retest, which is also possible. Price might come to that level for retest and show us a strong rejection to the upside. The probability is very high that a return into 2637, either in London section or in New York section, to put price to the upside. But at the moment, multiple double confluence have rejected price at 2645.09. This is 3 hours chart, plotting the chart of all the body or close of all the highs. We connect all the highs. These are all the highs, the body of all the highs. Forget about the week. And even if we connect the wicks, it will show that price Let's connect the wicks also to look at it. Let's connect all the wicks. If we connect all the wicks, this is what we get. So we change the color to black, and we want to see how the 4 hours candle will close. But at the moment, price has respected a broken structure and is sitting on temporary 3 hours demand. You can see touch 1, touch 2, the candle closed barely above it, and market open drop, showing lack of liquidity to the upside. And we have a resistance structure at this level, I guess, at this level 2659 presented a resistance structure, which price played exactly on touch of the resistance structure. So we want to see price break above the yellow line 2659. If they touch on the supply demand trend line, it's what it said it is. So we'll see how it unfolds. So if we break above 2659.39, that will open a gate for upswing. That gate will be very interesting to watch. It will be very interesting to watch. Very interesting to watch, because our previous analysis interpreted the right buy zone. The right area where we should expect price. So let's for now forget about bothering with so many charts and look at the current price action that brought us to where we are. We have here, when we look down, we have another structure from here. This is another structure. We have another structure from here. You can see the structure, which is still a valid buy should price returns again around 2614. This time price might not get to the demand floor for liquidity peak. Price might want to stop on the black line. I want to thicken it due to the importance of that level to me and to anybody who is watching, who understands market structure and how market is being calculated accurately. Every buy sell is well structured, well documented. The idea is to play a fast trick. So we will see how price unfold at this level. We have here a breakout structure. First we have price demonstrate. You can see the structure, a break of a support structure, retest, a break of a resistance structure, retest, retest, a break of a support structure, retest, another retest, a break of a support structure, another retest, and the last date retest, making here a demand floor due to the character. So we will watch price to see what it does next. And if selling continues in this week, this is a nice floor to watch. A very nice and decent floor. 2,500 is a decent floor, a new demand floor to watch, where we have a resistance structure, resistance structure, break of a resistance structure, retest, retest 2, retest 3, retest 4, boom, price has left. So we want price to return here for a comfortable buy. So watch out for this zone for a buy. This analysis is based on interpretation of the structure of the market. It's not speculative. It interprets what the price has done from the month of August to date. And if we have a strong fundamental, it can play against every analysis in the market. So we're going to have here as green indicating buy is another demand floor where price can come down to give us a bullish reaction. It is very clear that we can see what price has done at this level. You can see it clearly what price has done at this level. You can see what price has done at this level. So we watch it, and at the moment, price is playing along our price action strategy. It's obeying. Look at here, we have here a resistance structure, resistance structure. We have another resistance structure. We have another resistance structure building up as a supply, 3-hour supply zone. Zones work differently on different time zones. We have supply zone on a higher time frame and a supply zone on a lower time frame. But the higher time frame zone holds against a smaller time frame zone. So if we have a zone, a demand zone on a higher time frame, where the impulse of the market is riding on, that bias holds until we get to the floor and have a change in bias. So don't be quick to change bias halfway. For example, on a higher time frame, let's say we have a monthly time frame and price hit the supply roof. It is expected that price should return to the demand floor. So what does this mean? Because the impulse is a supply impulse, even on a lower time frame, keep a supply mindset. So what it means is you wait for demand on a lower time frame. Then when price gets to the supply, you execute in line with the higher time frame analysis, with a higher time frame bias. So that is the strategy. And we open the market in profits. Based on the strategy, we opened sharply in profits and we closed. Price did exactly what I expect, correction and a drop into 2,645.09, where we have a temporary support backed by double confluence, an ascending trend line, a previous supply roof turn demand floor, a break of the resistance structure. Price came for retest to affirm the potency of this level, and the resistance structure is broken. Now it becomes a demand floor. So we want to see how the day closes. So for now, patience is key. So we'll be looking at it and we know where this thing will end. We already know. So it's we are not novice. We already know. This is another twist. This is another twist to uptick. This is another twist to uptick. very clean twist. So if this guy is rising, we know exactly